Everyone, this is Vishal from Uncharted FX, and I know it's been a while. I want to talk about gold, but before I do that, some other important topics for discussion. So as I'm recording on September 11th, 2019, we just got this news, and it came out after market hours. But President Trump has delayed an increase in China tariffs until October 15th, and as you can see, the future charts, they all loved it. They were up triple digits. So let's see why he did it. Just hours after China, as a gesture of goodwill, waived tariffs on 16 types of U.S. goods in a clear attempt to get on Trump's good side and sweeten trade talks, a move which clearly was not lost on the U.S. president. Moments ago, President Trump said he was delaying a 5% increase in tariffs on Chinese goods by 2 weeks, supposedly out of respect for the celebration of the 70th anniversary of the revolution that brought the communist government to power. At the request of the Vice Premier of China, Liu He, and due to the fact that the People's Republic of China will be celebrating their 70th anniversary on October 31st, we have agreed as a gesture of goodwill to move the increased tariffs on $250 billion worth of goods, 25% to 30%, from October 1st to October 15th. And this was at 7:17 p.m., so I think, 4:17 Pacific time. So if you follow my work, I've spoken about how China is really going for the kill. I mean, they, in my opinion, have a lot of the cards in their hands, and it really is President Trump who needs this trade deal for re-election. He needs a strong market, a strong stock market, and a strong economy. He has to avoid the recession. If that ever happens, if markets are falling and there is a recession, then the Democrats will come to power. But President Trump needs this, and the Chinese know that. That's why they have remained patient, because they know that they can wait for a weaker U.S. president to be into power. But they know that President Trump, his Achilles heel is the stock markets, and he will come to them. And the Chinese can dictate a Chinese dictated trade deal, pretty much favoring them. If you follow the work, Kyle Bass has come out saying that the Chinese have actually they were offered a trade deal. So Kyle Bass, he basically disclosed that he was part of the Trump, he was giving free advice, for free to the Trump team, giving advice, for the trade talks. And he said that, a couple of months just before the G7 meeting, there was a deal, 150 pages, that was offered to the Chinese, and it was a win-win situation. And what happened was, at the last basically minutes, the Chinese scrapped the deal. They wanted the Huawei CFO released. They wanted basically 50 pages. First they wanted the tariffs removed as well, and they wanted 50 pages out of that 150 pages out of the agreement, and those 50 pages all had to do with enforcing enforcing everything in the trade deal. So essentially, Kyle Bass was saying that the Chinese don't want a mutually agreed deal. They want to win. They need to dominate. And the thing is, in President Xi, he has to appear as a strong guy. He can't back down. Otherwise, he'll be seen as weak, and he'll probably be kicked out of the party. And I've already talked about certain elements going on behind the scenes in China. So that was very interesting from Kyle Bass. And if you follow my blog and if you follow my trade ideas here, so I want to maybe market this a bit more, we'll plug this a bit more, but I do post more of my blogs and trade ideas on my trading view here. So they are trade ideas, but I do jump into or delve into sort of fundamental analysis and all that kind of stuff. So please do follow and take a look at my stuff here as well. But basically, I talked about the only two ways that China would sort of feel a bit pressure is if something happens domestically. And there's two things that we can look at. One is if they have some sort of credit issue, banking issue, and there is talks of certain Chinese banks being having to be bailed out. So that's a reason. And the second reason, probably the most important, is the food issue. And if you've heard, there's a huge pork basically a shortfall in China because of the swine flu and also the army virus, and China needs food, and the government there is now subsidizing food, especially pork. And there's a lot of talk about this, and of course, you know, that's what the Chinese government is afraid of the most. They're afraid of the people rising up, and generally, you know, food is a way, you know, through their belly to get people angry. So those are two things to watch for. So if we see that happening, that worsening in China, those are the only reasons why China will have to basically admit defeat. And of course, that would mean probably something bad for President Xi. But again, those are the two reasons why China will probably have to come to the table. But other than that, I think they are actually trying to take dollar demand. And I've talked in length about that, and I do expect that we will see the dollar going higher. So here's the S&P. So I was in this trade. I got in after this break here, just following my analysis and the way I teach my course, and also the way I approach charts. You know, nice retest, higher low, and remember the higher low is only confirmed with a higher high break. So you can see here that all world equities, here's the Nasdaq. So this is how my chart looked like. So this is something to look at. And again, folks, because there's nowhere else to go for yield, people realize that the party's not over yet. You know, these stock markets will be propped up and kept going higher because you're not really going to go into bonds or real estate as of yet if the Fed is cutting rates. But going to bonds, actually, let's talk about that. We did have a pretty big sell-off here, and there was a lot of speculation on why this sell-off happened. The 10-year was actually up 5% yesterday. So a lot of people are wondering, oh, you know, who's selling this, you know, the bonds, right? Is this money leaving the bond market to enter a stock market, right? As like a risk off trade? Or is this the Chinese perhaps dumping their treasuries? Or is it traders taking their position, say, you know, a Stanley Druckenmiller, or someone, sorry, I'm looking at the chart of the Eurobonds, but someone, you know, really as a big trade. But this could be a risk off trade. And again, when money leaves the bond market, where will it go? It'll probably be going into the stock market. So, you know, I've always been saying this and advocate this: always follow the bond market, because that is where the real action is happening, and this is what will tell us when the big one happens. So what I wanted to do, I wanted to talk about gold and silver. A lot of talk about, you know, what's going to happen with these charts. So I've given my idea on silver. You know, if you've been following my work and my analysis on silver, we broke above this very big resistance flip zone level here, and I was talking about this flip zone here. So if you go back, flip zone seems to be in support and resistance, a very big level on the weekly chart, and look how the weekly closed. We failed to close above it, and we failed to close it above it a second time. So these weekly levels, especially if it's a flip zone, which is a big zone, are very important. So this was a telling sign, which I think will probably get some sort of pullback. And again, I mean, look at this. This is the weekly chart. So we had lower highs, lower lows, and this is basically, we're looking for a first swing in an uptrend, right? Markets don't move up forever, or they don't move down forever. They have these swings here: lower high, lower low, lower high, lower low. And in an uptrend, a higher low, higher high, higher low, higher high. So you can argue here we haven't even had our first swing yet. So I do expect some sort of retracement, maybe back to this level here, and then from here, perhaps, you know, the actual first swing with another break, and we'll probably by year end maybe see $20 to $22 area. And then next year, I'm thinking, you know, that we will eventually get that big move. I am still very bullish on the precious metals. I still think we are in the bull market. Again, folks, remember, metals go up due to confidence crisis in government, banks, and the fiat money system, and that is yet to go away. In fact, just today, President Trump spoke about how he doesn't want a 1% rate cut anymore. He wants rates to be at zero and less than zero, so essentially negative rates. So he made history being basically the first US president ever to talk about negative rates, and you know, so again, folks, this is stuff that we have talked about. The central banks are pretty much out of options. All they can do is cut rates and go back to QE, and people will realize that the game is up, or, well, basically that's the game forever. We're going to be in controlled markets where we'll be in a zero to negative interest rate policy environment forever, and these markets will have to be kept up by central banks with some sort of stimulus. And this is where the confidence crisis comes into play, because again, you can't really put a number to how large these balance sheets in the central banks can be. I believe Japan and Europe are around 5 trillion or 6 trillion. America is at 3 trillion, or the Fed, sorry. So if they take it to 5 trillion or 6 trillion, when will that crisis happen? But essentially, people will realize the game that QE is here forever. It wasn't this one-time desperate policy to prevent 1920s to 30s global depression. It is now the norm, and it's essentially what the Keynesians do. They want big government, and big government likes this because they want to get bigger as well. So it's a win-win for both the bankers and the government. And government will get more involved. We'll see more taxes, digital money, digital currency. And it's funny because Christine Lagarde is taking the mantles over at the ECB. I believe tomorrow is Mario Draghi's last sort of press conference, and then Christine Lagarde comes in, and she's been very big on negative interest rates and digital money, digital currency. And again, folks, that is big because once we're digital and there's no cash, it forces you to keep money with the banks and to pay the banks that negative interest for keeping your money with them. So again, that is what's coming. If you follow my work, I've been open about that, and yeah, I mean, it's coming, right? So gold, let's take a look at gold here. We talked about this break out here, and this was the big sort of flip zone that we were looking at here. And you could see here, we not exactly there, but pretty much that's where the sellers were stepping in, sellers or people taking profits and putting stop losses above here. But this was a very important flip zone. You can see here, I like to use the bodies, but they are zones, so you could even play with these wicks here. So pretty much we hit that T there. We hit it to the T there, and essentially, again, folks, not very many swings here after the break. Again, I'm still very bullish on gold. I just think that this pullback will happen perhaps before we continue higher. And just as a trade, so this is a trade that I've been taking. It looks probably better on the 4-hour, but here on the daily we can play this as well. But let's look at it on the 4-hour. So essentially, let's look at the chart, sorry, on the 4-hour. If you look at my analysis here, this is where I got short. I had that break there. So the first part of this trade has basically happened or occurred, and we are now at this neckline or big support zone here. So again, folks, I think you can probably see that we had a double top here as well, but essentially what I'm looking for is some sort of lower bounce type situation, which will form some sort of right shoulder in what could be a head and shoulder pattern. And this is what I'm expecting. Again, this is just a trade. Long-term investment wise, I'm still big on gold and silver, but this is something that I expect maybe to happen in the next few weeks. Maybe we'll see a move up before we sell off, or the move going up might not even take it this high. We might just see a big pullback to this zone here where we broke out of initially, and then see the decline, but essentially to form some sort of right shoulder, which shows us a swing in this move and creates a pattern here for us. And again, maybe 1440, let's say, is a good support level, or maybe even 1420. I know a lot of people have used that number, but yeah, let's say 1430 here. Because I like this one because it's been support and resistance, so an area to look for. But again, folks, remember, this is just a trade. I'm still very positive on gold in the long term, and silver and the miners, etc. So what I think this is if you're a trader, yes, you can make some profits off of this, but long term, I think we will be having maybe the last opportunity to add to our gold and silver positions when we do see this pullback. And that is how I am treating it. I'm looking at this as a good way to essentially get into really great miners and junior miners and royalty and streaming companies that I really like, and that is how I am treating this potential move lower. Of course, if we do break back above this flip zone here, let's say the 1500 level, that will sort of nullify this area, because this is sort of the big swing that we are working with. You can see here buyers tried to bring it up, but the sellers stepped right in. But again, I am favoring a bit more of a pullback, and again, just looking at the longer term chart on the weekly, that is something that we could expect. It's very normal, so expect some sort of probably some sort of pullback. I don't think we will go all the way back down to 1360. I would be surprised if we did, but I would actually technically welcome it, because it would mean we can get into positions much cheaper positions. But I would expect maybe a pullback as we looked at on the 4-hour and on the daily, to sort of like these 1440 or 30 level. So that's what I wanted to talk about. I know you haven't heard from me for a while, but again, I do encourage you to check out my trading view and the blog, where I do post some stuff. But we are seeing essentially all this analysis that I have been talking about start to come true with gold and with what's happening geopolitically with the markets. Expect the stock market to go higher, because again, as long as the central banks ease and cut rates, there's going to be nowhere to go for yield except stocks. And Wall Street sees this as the party's not over, but it will finish one day when that confidence crisis happens, and it will be the middle class who will be left holding the bag. So again, folks, that's it from me. If you enjoyed this video, please give it a like and subscribe if you haven't already, and you will hear from me soon.